Hello, good morning, everyone. Lois, let me know if you can hear me. Okay. So thank you so much, everyone, for being on time. We're ready to start. And today we have our final Learning Week series, and we're looking at Beyond Capital, how to build financial systems that drive sustainable business growth. And we'll be joined by Jackson Wambungu Mwehe, who's the founder and managing director for Venture City. And we'll be looking at how we can look at financial systems, effective cash flow management, and strategic financial planning to really help you as an ESO, which is an entrepreneur support organization, or even you as an entrepreneur to see how you can actually move beyond accessing capital and really achieve sustainable growth through long-term resilience. So, Jackson, I can see you're on the call and you're ready. Let me hand over back to you. Welcome. Jackson, just try say something. We can see you, but we can't hear you. So as Jackson is testing his microphone, could we just use the chat to introduce ourselves, where you're joining from, and also what you do? Because also we want to see how you can use this as an opportunity for networking. And then we will kick off when Jackson joins.
Hello, good morning.
Yes, we can now hear you.
Thank you very much. Much apologies for that, Mercy, and thank you for the introduction. I'm very sorry for that. I had to log in again for clarity. So can I proceed with the information, Mercy? Okay.
Yes, please, Karibu.
Asante sana. Yes, my name is Jackson Mwehe Wambugu. I'm the founder and the acting CEO of Venture City Limited. And I'm very actually humbled to have this session today on our subject today. First of all, I know most of us really have the background of the financial management itself. And therefore, I will try to, as much as possible, stick to today's mandate. However, you will allow me to sometimes go back to the finance principles because they govern the topic of today. So once in a while, I'll be relating some of those finance principles to the systems that we are going to be discussing. And please feel free to let me know when I'm off track. And any questions, kindly, I will be ready to handle them. However, I would also wish to maybe have a quick introduction of the people in the meeting so that we know each other as we move along, kindly. We can have, with your permission, Mercy, again, we can have the introductions, quick introductions, then I'll take the floor. Maybe we can start with Nancy Dalla, kindly. Nancy, you can hear us? If she's not ready, maybe we can have Esther Mwangi to have a quick introduction and maybe the expectation as well.
Good morning, everyone. I had to confirm from the clock whether it's still morning. Good morning, everyone. Esther Mwangi is my name from ZTech University. I lead IZ Hub, and I'm also serving in as a director in charge of research, innovation, and postgraduate studies. It's a pleasure to be here and looking forward to learning more on how I can be able to support student entrepreneurs.
Lawrence Musyoka, if you can hear us. All right.
Hi.
Hi. Yes. Good morning, sir.
Thanks so much. Hi, everyone. I hope you're well. My name is Lawrence Musyoka, and my background is in finance, and I really look forward to the session, especially just on learning about the necessary financial systems needed to build sustainable businesses and enterprises. So it's a pleasure. Thanks so much.
Thank you, Lawrence. We hope to have a fruitful one. Thank you. And I can go to Emmanuel Cheriot, kindly. Yeah, Emmanuel, if you can hear us, this is a call for you to have a brief introduction if you can. All right. For the purpose of time, I will proceed to John B. In the meantime, as Emmanuel and Dalla prepare.
Many thanks, Jackson. I'm mostly currently an independent consultant, but previously having served as a partnerships and consulting manager, especially within agri-fintech, but mostly inclined on the climate adaptation aspect of it. So my expectation around this session is, to know how to better, get to capacity build SMEs. Thank you.
Thank you, John B. Very clear. Thank you very much. I like that part of the expectation. If Dalla is here anymore, you can have the introduction. If not, we can go to Emmanuel as well. Cheriot. Well, Nicholas Mutune.
Good morning. I'm Nicholas from Veja City. I'm here so to listen to our CEO.
Yeah. Thank you for joining us. It's all right. And Anderson.
Good morning, everyone. My name is Anderson Kenodia from Venture City, the software implementation manager at Venture City.
All right. Yeah. So if all the introductions are done, I will be glad to take the floor, and hoping that my window is visible. Let me just try to put it on a friendly way. In the meantime, if Emmanuel or Dala is there, you can still have the introduction. We also didn't hear from Mr. Kioko Nziza, sorry. Nziza? Okay. Is my screen visible in the meantime?
Yes, your screen is very visible.
Yeah, so I'll also give a brief introduction of who I am. Again, in the context of work. As the CEO of Venture City, of course, I have had the experience of working with partner organizations and also the ESOs, as it were, to deliver working financial management systems. And of late, of course, working with ERPs or enterprise resource planning tools that are on a practical approach to the users of organizations. So we have two firms. One is Whistling Venture Technologies Limited, which operates in Kenya. We have Venture City, which is currently operating outside Kenya, predominantly in Uganda since 2016, and in Rwanda, where we have some organizations we work with. So I am the founder of Venture City and Whistling Venture, and our only expertise is how to help organizations, both partner organizations and ESOs, to deliver the best financial management practice using modern tools. And without much ado, for purposes of today, and I believe all of us had the main topic of discussion. I'm happy we have an institution like Zetech included in this discussion, because that's where we have a lot of budding startups that are coming up. I'm seeing a lot of that happening from the institutions that we have worked with, especially in both countries, Kenya and Uganda. So I'm very glad to have you here as well. The finance consultant in the house, I'm also happy to have you, because the discussion, of course, will always rotate around what are the best practices and therefore how we can harness them in the simplest manner possible. So today, we are going to look at, I'll straight go into what the reality is on the ground and what we have seen for the over 350 organizations we have worked with over those 8 or 9 years. And the critical gaps that we have seen, especially on financial management. And well, people will call it blind spots. But what really is making sustainability of ESOs especially, because here we are being represented by enterprise support organization teams. So what really have we seen? And this will be from a very practical experience. And also, how do we blend the financial management into the accounting systems or financial management systems or any other systems that we are going to use? We are also going to have, again, a deeper in-depth of the real stories and the real numbers of the organizations we have worked with. Some of these organizations have allowed us to share these stories with you. And therefore, some of those chosen ones, we can even give you the contacts, because they could also be used as case studies, especially for the institutions that are represented here, as to how we can use the technology and finance management practices to bring speed and efficiency in the things that we're doing. We are also going to look at the cloud accounting advantage, which I'm a proponent of since these organizations were started. And also not to forget the AI of things that has come as a disruptor of all these things that we are talking about. And lastly, we will quickly look at the building of the investment case, again, from our perspective and our experience from those organizations that we have worked with that are having systems and those that do not have. And therefore, what is the investment case, as it were? As a quick overview, yeah, we have dealt with 200 businesses or direct clients, and therefore we are going to be borrowing from these experiences. We have also worked with foundations that are basically ESOs at a larger level, and how we have helped their partners and themselves to have a seamless coordination between themselves, especially when we come to finance. And straight into it, I will go into the real things that, again, as our experience, what have we seen? And it comes to financial system and capacity of these ESOs. The first time, of course, what we find is that revenue at whatever level is, they are basically feeling it, and it's not a figure that they can put their hands on. And most of the time, without revenues, of course, and I believe John B., who is here as a consultant, will know and tell us that indeed it will be very hard to operate without having very clear-cut revenue streams, and therefore how they are also managed. For ESOs who are having donor money, and they are also having their sustainability question, we have also seen a conflict between the donor money and the owner money. You know, the institution itself as the ESO and the donor money that is given on behalf of a partner, let's say. And we are going to take a deep dive into that as well. Then we are also having the issue of financial reports. Financial reports, of course, in most organizations, we find that happening only when the donor needs them. But are they really working for the ESO? So we are also going to have a look into that. And also we have had, and without prejudice, John B., I know you are in the meeting, where the information is being held by the consultant or the accountant. And therefore, I, as the ESO team lead, do not have control of those numbers. So this is the reality of the I am very, really, I would say I'm very shallow on this because we are looking at an upper level of an ESO, not really from a partner. But you'll find the challenges that are facing an ESO are also very prevalent in the partners that this ESO is going to serve. So if we have, let's say, even an accelerator that is going to serve 12, 20 partners, the challenges that the accelerator is facing are prevalent, and this is from my own really finding, are also prevalent in the partner organizations that are going to be supported. And therefore, like I said in the beginning, I'm going to interchangeably be using the entity or the partner organization and also the ESO that is assisting them, especially in this context. Not really in another area, but just in this context of financial systems. And before I go to the gaps that I have alluded to, I will just take us back because in this meeting we have different audiences. You will allow me to give the background of the financial management before you even look at the gaps that are in the financial management. Really, what is financial management? And very quickly, I can go through it. So, financial management, by definition, is the efficient and effective use of resources in a manner to accomplish the objectives of an organization. So, all these, of course, have a formula. And again, even when we are talking about systems, we will also be very careful not to forget the rules and laws that govern how accounting and finance is managed. So we will again be referring from the International Financial Reporting Standards or the general accepted accounting practices, and also the principles of good financial management. And again, it's good we remind ourselves about what then are the principles of financial management. There are 7 of them, and very quickly I'm going to brush through. One is being consistent in what we are doing, be it that we are using a digital system or not. Accountability of whatever we are doing, whether to a donor or to our partner organization. Transparency. Of course, transparency is required in any of the organizations, but it is a required thing on financial management. Integrity, stewardship, and accounting standards. So we will not have a discussion of systems really without having a hit on these finance management practices. Otherwise, we will be working, especially on our side as a systems proponent, we will be working against the principles of good governance and good accounting practices. Again, the same accounting rules or finance management rules require us to have what we call like building blocks. And these building blocks, again, are only 5 of them. I don't think they have changed. And the first one is planning and budgeting for any organization. There is reporting, be it for compliance purposes or management reporting or any other third party, investor funding. So reporting is a key tenet of it. Then we have internal controls that govern how we do our things through maybe a finance manual or something. We also have accounting records. Accounting records, therefore, becomes just one area of the financial management realm that we want to, that we need, that it helps us to have the best financial management practice and therefore be able to install or implement a system that is very solid, that anybody looking at it or using the data there has the credibility, the transparency, the accountability, them being now the principles of finance. I thought it is important to have that background so that now when we now look at the critical issues that face financial management, we are all on the same page. Like I said, kindly feel free to let me elucidate where I'm wrong. I can be corrected still in this session, there is no problem. But also, I would really want an input where you feel it's needed. So the gaps that, again, we have come across, mainly, there are so many gaps, but I have decided to zero in on the ones you see on the screen because this have really cost some of our partners or clients before they implemented proper systems. One is what we call cost centers. A cost center basically is a line that normally has a cost attached to it or expenses attached to it. Yeah. So most of these ESOs that we have worked with have very many programs. I remember there was a case in Uganda where a support organization came to us almost a bit too late because they had so many donors. You have an embassy here, you have you have, especially in the government embassies, you have some European Union people coming in, and the only thing you can have are, let's say, individual spreadsheets of what you did, you have as what are the expenses of that. So cost centers tracking, therefore, has become a very important aspect. Of course, not without the revenue centers, because of course you want to have the individual reporting entities as units still within the organization. And again, this now amplifies the need to have the automation or the system so that you can have these multiple programs and know which program really is going and giving us a deficit every time. If we bank on our diaries, there is a likelihood that that diary will not be updated early enough, and or it is kept by Jackson, and therefore when we miss it or Jackson does not come, it is not there, and therefore validates the need to have a very working system for this ESO. Then there is what is cash flow forecasting. And I believe every partner or every donor, every investor would want to see the projections. What are we anticipating to get out of here? What do we intend to achieve in terms of figures? And therefore, and again, this is why I said in the system discussion that we are having and we continue to have in this discussion, then how do we embed forecasting as not only a tool that is independent of our financials, but as a key part of what we want to do for either our donor or for our own understanding of what is happening. More often, you will have different forecasts for different needs. And I believe the consultants here will agree with me. So you will have the administrative kind of a forecast, you will have the budgets of the donors and all that. How then do you put all those facets of forecasts in one efficient prediction, yes, and two, in a very easily accessible manner? And therefore now you will hear me talking more of the cloud technology solutions, and now also the AI when it comes to the prediction on the cash flow forecasting. I will, and I believe the finance consultants in this discussion will agree with me, we have come a long way in the way we are doing forecasts. If I go even 2 years ago, there has been a lot of disruption. Forecasting was a big thing where we would really require very sophisticated, maybe chief finance officers, and they are still required, by the way. I'm not really saying that technology has eliminated that. There is still a need for professionalism when it comes to that. But it has made work very easy when it comes to that. And it's something I'll also be mentioning. in the progress of this discussion. Fixed asset registers, I have seen a lot of project discussions where when projects are started, we do not have an independent fixed asset register. I mean, we have an independent fixed asset register, maybe in a spreadsheet or in a book, but this is not captured in the financials. And more importantly, there is what is called completeness. I really want to avoid the accounting discussion too much because really it will be a bit distracting. But when we are managing our fixed asset register, how do we do our depreciation without having so many manual entries, right? And again, systems and the advent of, again, artificial intelligence, we have been able to embed some of these modules into the financial management systems so that we do not have a separate system or separate systems operating differently. And again, we look into that far ahead. And then when it comes to ESOs, payroll and people is a key discussion, the human resource aspect. So how are these facilitators being managed and how does that reflect into our cost centers? What is the relationship between the HR aspects as an ESO to the programs that are happening and the allocation of the same? Then there is the investor readiness packages that we have seen. As an ESO, maybe you are facilitating some partner organizations to get some funding from the government or from the programs of the government, from the ministry and staff. So when a funder comes asking, for these reports, do we really need to tell JB, you have to work the whole night to give us all these reports? Because first of all, data produced in a quick period may have gaps and may not be very reliable. So how do we make it as a culture of systems to run along as a culture of the organization, to run along with the real-time reports, be them financial or otherwise, and from a very reliable point. And therefore, what we have seen is that many ESOs that we have interacted with, if the funder asks that, let's say for management accounts, I need your management accounts for the last set of 2 years or even 3 months. Well, we may borrow some time from them. We will work on it, just give us some time, we will give you the management accounts. At that point, the funder knows there's a fundamental issue in the way we are running our systems. What if then internally a board member is asking, a program X is consuming how much in this half or this quarter? And do we have a break even for it? Then we will have to talk to the consultant or the finance manager so that we get the figures. But the question remains, where is the accountant or the finance manager or the consultant referencing the data of our organization? Where is he getting the data? And therefore, the system discussions come in. And maybe it's even for annual compliance audits, and we have invited our auditors as an ESO. Can we therefore get our fixed asset register, our petty cash logs, bank reconciliations and all that? Well, again, becomes an issue. Partners as well. Maybe we even have partners who want to come in and do some things with us. They want to work with a solid organization. So they maybe want to see our revenue diversification breakdown for a particular period, and how easy can we play around with that? So most of these questions, and I have particularly picked these questions because they apply along management reporting, compliance reporting, and also, investment reporting. And therefore, the discussion of the system is, according to us, a discussion of the system should serve, or a good working system should not only serve one area of the reporting elements as governed by the principles of financial management. It should have an array of needs that are sorted so that even this person who is reporting, is it the accountant, is it the consultant, their work is more efficient and easy. Remember, by definition, financial management entails efficient use of the resources, including the time of the accountant and all that. So we want the discussion to be as broad as possible so that these requirements that are given at any given point, as long as these people have authority to access this information, then we are able or the person who is supposed to do that is able to give that information. Meetings become shorter, and we hit our goals, and people can now focus more on the key issues that are governing the discussion. So as an organization, we have come up with a template of the things that we need, especially for the people we have worked with to see. And this one we are borrowing, not really as our organization, it's based on the best practice across the world and based on the good finance reporting standards. What really do we need, especially on an ESO discussion? Support organizations should be very robust, especially when it comes to budgeting. Budgeting, be it for multiple projects, be it for singular projects of administrative budgets. And this one, I can tell you, I think I have seen a lot of progression, especially from the partners of companies or organizations that we work with, be it schools, be it profit making, be it partners like the real enterprise support organizations, even on a function of we want to see how our partners are doing their budgeting. So a support organization will be very keen on how they are doing that because they don't want their budget to be messed. So at that point, we will help that target organization to put their things in order, literally, in a way that their budget dashboards are very clear. So that if that budget is showing a deficit in this forecast or projection, then the decisions are made. And that's why now I know people like John B in this meeting will be able to give an insight now deeper that, you know, if this is the indication, then we should do ABCD and give the best recommendation in the easiest time. Cost centers, like I had highlighted earlier, we have previously had instances where the cost centers overrun what was budgeted. So it is intentional for me actually to put them in that line. So whether we are the support organization that is consuming the financial report, or the partner that we are governing or we are guiding along, how are we managing that? Previously, because of the complications of the existing systems, and not to mention names, it will be very hard to have these cost centers without having a cost input to have it done. And therefore, again, thanks to technology, that now you can have so many solutions, not only venture cities. There are so many solutions that can now easily embrace that and be customized, even from a local context. And this is where now institutions like ZTech, I'm happy they are here, that they come in and adopt that early enough. I'll be very open that what my experience has been and why I am actually pushed more systems than into a manual way of doing things is that when I first went to work, sometimes in 2010, 2011, I was given systems to use, but these systems are not governed by what we know or in the context. So I have to do so many other things on the side to have the system serve me. And what we are saying is we can have this in a very simplified way by adopting the current technologies that are there. And I'm happy an institution is represented here. I have always been actually asking, how are we going to do, as system proponents, how are we going to push it to the people? And the players, of course, are the institutions, like, of course, ASEC, ZTech, all this, the government. I have even tried to knock on, so that people are sensitized to use systems to have these things. They look very basic, but when we go to the field, the difference is that we do not have those things running. People are still struggling to have working systems. And we are here today to say, fine, it need not be painstaking. You can have your budget dashboards, you can have your cost centers done, you can have your forecasts for cash flow. Cash flow, of course, is one of the things that also brings people to their knees, and ESOs and partners alike to their knees. A small mistake like this, if we had a projection that didn't happen well over revenue, then our creditors start to swelling, and our reputation is at risk, and so many other things. And then we have accounts on demand, and this one I have seen even in the private sector, the commercial sector, where a bank is asking, I need your 6 months account. And the only thing I can do is call John B and tell him, you know what, the bank needs to give me an 8 million Kenya shilling loan, but I don't have my management accounts. So we will sit with John B. He'll be very diligent. We will work with him. But are we using really historicals that are guiding us properly? And this is where the day-to-day use of digitized systems comes in. The donors are always asking for their reports. And this one I have seen for all my career, that there is no donor really who give us and doesn't want to have an expenditure tracking. Some will even compel us. Like we currently work with a donor who's working with the government of Finland. And it's actually the donor is government of Finland. And what the government needs is for you actually to upload these reports at particular periods. So where are we getting these reports? And whatever problem happens, that we do not have this information. So a system becomes indispensable, and systems, and particularly financial management systems now, take the lead in making sure that even the supporting documents that we are using, the budget lines, tracking, the percentage burn rates, and all that are all done in the right manner. And therefore, of course, that is closely related to the investor readiness. And these things, like I have said, for sure, most of the support organizations really know about this. But how is it getting done at the ground level? Because different institutions are also at different levels of adoption of these technologies. So how okay, I'll give an example. As an organization, we do not actually suggest a system before we do an assessment. And like you see, there's a process within which these solutions are adopted. Because somebody has an input, can you? Somebody has an interjection? Okay. If somebody has some input or a recommendation of how I should proceed, is still fine. I'm very ready to adopt that. So we have now looked at the key areas that we have as an organization to look at for us to be able to see. And I had made a small process flow of showing us why our financial systems, and especially the digital systems, why are they the missing link in the ESO ecosystem sustainability? Well, we know that an ESO will deliver a program, whether directly or indirectly. And therefore, the funder or the sponsor will require the evidence of that happening. And therefore, the ESO is mandated with producing the reports. Now, that makes the decision of whether does the funder renew or expand the partnership. If the answer is that yes, the systems are robust enough, then the ESO will definitely have a growth trajectory. But then, where then do we have a problem, or why is this discussion now? Why are financial systems not working? By the way, most organizations are using, including digital tools. There are so many platforms in the market. But where are they really breaking down? In our finding is that the management accounts are done not really to have the fact, but they are done again, like I said, to fulfill an objective of reporting. And it will never add up because the expenditure that was done in the management accounts will not at some point match with what was done for compliance, will not match with what was presented maybe to the board as an audit. And therefore, somebody will speak that, and therefore they will be like, we are not very strong. The people or the organization does not have a very strong system. Then the cost center tracking, like I mentioned earlier, and this one I have to insist on it because this is something that we have tried to put across to even the organizations we have dealt with, to let them know that the cost centers cannot be done overnight. They have to be built over time. And this is why, even by the rule of it, even when you are putting a financial management system, your chart of account needs to be very elaborate. And if it is not there, it needs to be built as the system is built, so that you have very clear cut, and we call them granular cost centers. Then we have the asset registers. Like I have said, some people are having, like now, we are currently as a company working with some organizations in the Kinangop area, and they will have problems of, yes, as a donor, we have given you a cooler or a cooling plant worth 5 million, 4 million, and there are 4 of them. So it's quite an investment. But you will find most actually partner organizations will not give their ESOs very good accountability of where those assets are. Recently, we were asking someone, we asked them for the asset register, and they excluded a borehole. Yeah, they excluded, so I think in this discussion, we should also say the financial systems are delinked from the actual happening on the ground, sorry, because we do not have the right processes of actually implementing these systems. So financial systems or systems as it were do not work without us looking at actually where does the problem come from. So asset registers and why there's a reason. There are so many loopholes, but I am saying I'm focusing on this because is where I have zeroed in over time of where these problems are when it comes to the missing linkage between the finance system and the actual happenings. Forecasts, I already elucidated about this. We have forecasts that are done to satisfy a funding decision, but they are not really to govern our actual happening on the ground. Most of the time, actually, most organizations will drift from it. So then, after saying all this, how do we then have a good, what is the best approach to have a working system? A working system, like I said, a system, actually a financial system could be manual, because if you are using something to track, then that is regarded by definition as a system. Of course, we are rooting for digital systems, but whichever system that is being used, be it a software, be it a manual book, be it a diary, then or be it a spreadsheet, what really entails building of that? You'll allow me mention this. When you look at how systems are done, most people will look at the software part, but the software part is I would say is almost the end part. Where does the process begin? It begins by first assessing the financial requirements of this organization. I will mention examples. Maybe this is a cooperative society. Maybe this is a circle. Maybe this is an ESO that supports donor-funded programs. Maybe this is the partner themselves, because the ESO wants to know, I mean, how did it happen? How is it happening? So the assessments should happen at the scale or level which we want to see. Some requirements of reporting are even governed, and this one we have seen a rise of it of late, by international rules. If you have a EU partner or a World Bank partner, there's a way they want their reporting to be done. As the system implementer or the person doing the system architecture for you, they should put that in mind. It shouldn't come at a later stage. It should be assessed and be like, who will be requiring these reports? The system should be very robust to have a reporting pipeline that can serve those needs without a cost escalation at a later date. Because what you will have is a system, and you can see most of the products being advertised, and that's why I think as the purposes of this session, we cannot even tell you buy a product we recommend, because even if we come to the site, we believe our work should be in ensuring that the system is working within, or any consultant who is designing a system should work in the lines and governed by the processes of how then is it done, so that we don't reach at a particular level and we're like, that is a scope creep. We did not even know what was required, but now the EU is asking if we are compliant with global data protection rights, if we are compliant with the user and access rights, if we are compliant with the laws of the land when it comes to Kenya Revenue Authority, Rwanda Revenue Authority, or Uganda Revenue Authority, as it were. And the discussion now of what the system that you require of, does it need an ETIMS, depending on the person you are dealing with? Does it need in Uganda an NEFIS or a fiscal receipting integrating capability? Does it need a Rwanda EBM capability? Now, those discussions have a cost implication, they have a usability implication, they have also a case where you don't want the recipient of this financial management system to spend more than they're supposed to, or to get redundant modules that they don't need. So we have to identify the gap. Then we come to the second, this is just an example. The second is that we can say, we can now implement the system, whatever it is. I'm just using examples here. We will give a system that now is fit to the assessment that we did. And like in this case, practically, we have seen a lot of change dynamics in the milk industry, for example. And as you work with those partners, you realize the needs keep changing. Now we want metrics done on our milk. We want alcohol content in the system done in the content and all these things done, water levels, the density of the milk. You see, a good system, therefore, should encompass all those requirements, even at a future date, so that it is flexible enough. Whatever system that really, as an ESO or as a partner, you recommend to a partner, it should have the flexibility that it is easy to design those chart of accounts and flex around with them. If they add a branch, how do I add? And therefore, at the second stage of system installation, this is where the actual discussion happens. The logos are attached, the customization of the invoices are done, the report templates are done. If John B says, I want this report in this manner because that is the way the donor needs it, I need access to the system, we do all that design as a process. Then you will say, fine, the system is okay. What should be the third step then? The system is okay, but it does not have my data. And therefore, we have a process, a third step called data migration. And data migration entails us now coming to your organization and tearing it apart literally in terms of numbers and saying, governed by the rules of accounting and finance, we will want the opening balances, for example. And these opening balances is a point somewhere on its own. And after that, we run what is called an opening trial balance. We'll tell you, fine, as an organization, you have now your opening figures, you are ready for the system. Can you validate them? So the organization and the board will say, yes, we have all these opening balances. This is our trial balance. This is our organization. This reflects our organization. At this stage, a good implementation should involve everybody, including the auditors, the external parties, the consultants who are working with you, so that now you don't run a system and afterwards the auditor comes and says, I can't use the system because the data did not match with my opening balances. And I know we have finance consultants here who I really work with closely. I have seen a very big disconnect again here when the information is being migrated and we pick the opening balances for the audit, not really to question their work. I really respect them a lot. But what is the reality of those customers you have said belong to this entity? Can we break them down? What are those suppliers that we say in this audit report? And therefore, what I have also realized is that this report is like an organization will have different reports. Fair enough, because it's really not in our mandate. But for the actual happenings and management reporting for the organization to know what it's doing is right, we always recommend for the actual. We always recommend for the fact, so that we always have an opening or a balance sheet that is reflecting the reality. This again amplifies and cements our adherence to the good finance practices of transparency, accountability, and the rest. So at number 3, if you ask me, is quite some daunting job. It's a hard task. You have to work and understand the organization. Most organizations do not have permanent financial staff. They will rely on a consultant. So this one has to take a lot of time sometimes, because you don't want to migrate what is wrong. After that is done, then we have migrated the data. We will train the users of now from here, please, we'll handhold you. Move on using the system, run the reports, run the customer statements, bill your donors, bill your customers, do your cost centers. Are they reflecting the reality? How easy is this done using a manual spreadsheet of saying from spreadsheet 1 to spreadsheet 50? What is the connectivity of your financial reports? Can you get your balance sheet at the click of a button? Can you get your management report on your phone, on the go? And therefore, step number 3, according to us, is very critical as to how that organization will use that system for the next 10 years, or they will start complaining immediately we leave the site. Number 4, we have what we call close range support and spot checks. especially for the first financial period. So a good financial system and its implementation should not happen at a go. It's not an installation thing. It is the journey between the assessment and are we actually achieving that? Sometimes it takes a year, depending on the level and scale of the organization. But is the system running on the first week? Yes. But now we need one financial year so that the people who should validate, including the auditors, the tax authorities, the donors, are they saying that this financial system is giving us what we asked for? And therefore, this journey of number 4 is called handholding or support, really. But it is a very key part of knowing whether the system survives or not, or whether the system breaks down or not. We have examples of clients we worked with maybe in 2017, just failing when it was 30. The branches have grown to 60 branches. They don't need to ditch their old system to buy another one, because now the scale has gone to 200 users a day to 60 branches across the region. They will have to work with us over the years to give them the support. So the system also has that assurance bit that as how good it is okay, but how do we get the support? Do we have a support system within the providers as well, so that we are not, if we hire a new accountant, we don't have to change a system. Changing systems is a painstaking approach. In fact, in some places, we see where an assessment is done and we tell them, don't change the system. We know how painstaking it is, but how, if it can be tweaked or changed to suit you, then you don't have to go through the whole hassle of installations, migrations, and that. And I'll give an example of Uganda Railways Corporation, which in 2020, and this is a true case, they bought their system in 2002. In 2002 is when they acquired the ERP, which is a financial management system, a good one. It's being used by corporates around the globe. So it works, at least on a global scale. But then, 2002, I think I was in Form 2. Yeah, I was in Form 2. The system did not work up to 2020. So we are talking of maybe 18 years later. 18 years later, so they called us and said, come and check what is happening, because the parliament is asking, why is the system that was installed is not working, and therefore you want to buy another. All right, so we go to site, and what we realize is that the system really can work, because at the scale of that level, yes, it can work, but the users are really not aligned with the system. What we have are those spreadsheets working. And as an example, like Uganda has very huge numbers. So you can imagine for a corporation like Kenya Railways, what kind of numbers you're looking at. It's in trillions, but they are not related, or they are not interlinked. You cannot run your asset register. You cannot run the railway lines on the same financial platform. And therefore, the work now is on step 4 that I would say maybe did not happen well. That the people who are supposed to handhold the system either were too expensive, which is also a fact, or the retraining and the support, close support, is not happening all the time. All right, then we will go to step 5, which is basically an investment readiness sign-off. And you have seen your organization has come up with a system that is generating proper financial statements, proper donor reports, proper tax reports, budgeting variance reports, and all that. So then we will say we have a commissioning certificate, and all stakeholders are called into place, and they are told, fine, the auditor, are you happy with what the system is delivering? Yes. The consultant of investment, are you happy with what the system is giving? And by the way, coincidentally, like today we have a financial is going to an aggregator in Kinango, and we are not even really worried. We know they will be happy with what they find on ground, because a robust financial management system, according to us, should be visible by people even when we are not there. All right. So the investment readiness sign-off is a good way of saying, did the system that we gave you work or did not work? And I'm not saying referring to Venture City. I'm saying referring to we are a big community who deliver the systems. So this community should adhere to this 5-step approach. Of course, there are other nitty-gritties in the middle. There are things that I also mentioned at this point, including, and this is important on data protection. There has been a rise of data breaches that have cost organizations a lot. And I have a lot of data, by the way, that I can bank on to justify this statement. Factual data. There was, again, an aggregator in Nyandarua. He came, got a young man, a very good young man who knows how to fix systems, puts the system in the machine, but then I actually have the names of the companies because now they are quite big. Then this gentleman went and shared the data with a competitor, with the other partner who was working with this aggregator. And he started the business with the data of the other person. That person up to today is our client because when we went in, we didn't know that history, but he shared with us later. Data protection is becoming an in thing. And that's why an organization that is also doing these systems should also be sure to be compliant with the trends that are happening. Our data protection landscape is really not very robust, but like as a company, for us, as an example, what we do, we bank on the global practices that are working. One, we will work maybe with an organization, as an example, we will work with an organization like Amazon Web Services, which has a global capability to protect our customers. And then we work alongside rules like global data protection rights policies in the EU. 30 countries have come up with a policy. It should be a good policy. It works. So then we borrow that and use the same to run our local operations, because we understand the sensitivity of the same, or we should understand the sensitivity of the same. And also, there are some local frameworks that are being put in place, which we are supporting a lot. The Office of Data Protection used to be a very dormant section, but currently, if somebody is deploying a system to you, it is good you ask them, even as an ESO, you are going to work with these partners. Do they have a data protection certificate? Is it valid? Has it been cancelled for a data breach or something? Because as aligning to Office of Data Protection, there are some guidelines of code of conduct, ethics, how many people you should have, should you support? And this is why in this team, as we are having this discussion, I am happy when my colleagues, my team members, Nixon and Mutune, Nicholas Mutune, hear this discussion, because it is a discussion that governs also the protection of the customers that we serve, and also as people who want to practice from an ethical perspective. It's becoming a big thing. Artificial intelligence is good, but of course, the downside has been that, like they say, we have so many experts and we have so many breaches that are happening, even without the consent of the owners. I am glad and I'm happy when I was signing in for this session, what ASEC did gave me a procedure, to sign in, get your link, sign in, get, it can be as basic as that now when it comes to protection of the people who are here, then how are we doing it? And the approach should be that the customer is protected. I am seeing a lot of push, and which we are implementing, and my colleagues in this meeting can attest, is that we are having a lot of push for people to automate completely. All right. Then the cost of automation comes with a bit of shedding part of your information. Like I think yesterday or the day before, we were doing an integration for an aggregator again, where they want all the M-Pesa payments, their bank, whether it's cooperative bank, everything to be done automatically by the system. Yes, we have done it. It's done. But it is not devoid of the carefulness or the caution that should be done for their own protection, and also for the protection of maybe our reputation. So this is just one of an example of examples of the things maybe we have not put here, because of course the session is on a higher level, I understand, and therefore we may not go to the nitty-gritties. However, we would be glad to have this discussion as deep as it should go, or we want it to go, especially from the ASEC perspective, and also from even institutions like ZTech. I wish the other people also introduce themselves so that I also get to know the people, because what we are also happy with is when we share this message, and not really for commercial gain, but when we share this message to the people who can help in numbers. At school, recently we were in JKUAT, and the people there really want to do the right things, but the connection to the market of what really is a financial system supposed to be from a practical approach. When I left university, I went to a desk. We are 18 accountants. I think we are rolling out an enterprise resourcing system. And moreover, that time things were a bit maybe more manual, even in system deployment. I'm left in the dark. I have to suffer a lot to catch up. But then, as an industry player now, what I'm proposing is let systems be demystified. Let them be open. Let financial systems not be an expensive affair to discuss about. Let people not stick to manual bookkeeping or even reporting or having visibility of their business only from the accountant's perspective. Let them be owners of that information. That only happens through these discussions that we are going through of financial management systems. Again, for business sustainability, because again, we see this all the time. And again, within the right framework of data sharing, there is some information as an organization that we can share that is really not confidential information, but can help institutions that we are having here and even other users and ESOs not to get into the same pitfalls. Because we basically, this is our day job. So we have a lot of data, but we believe it has not been harnessed properly because working with over 300 to 500 organizations in different jurisdictions, of course, gives us a good visibility. Could not be the real case on the ground, but it gives us at least an overview of what is happening. All right. So I will proceed now to what really then should a good system deliver. Again, you'll have your budget tracking done online, real time, at the same time, on different gadgets by different users, as long as people have the rights to do that. Multi-donor cost management centers are managed, so you don't manage independent. You can have a consolidated report for all the donors. You can expand it across programs. So a good system should also have that. You should have your dashboards, like for forecast. A dashboard basically is an interface that just shows you, maybe in visuals or otherwise, what parameters or metrics that you need to see at a sneak peek. Like recently we had a requirement where, yes, we have put in a system, but we want now to see the number of persons with disabilities, male and female, number of youth. So how is your system agile to take this information, or do you need to hold different setups of the same? A good system should have a way that you are only using one of it, even to put those advances or enhancements. This person is bringing me milk, for example. Today I'm very biased on the milk sector because that's what we are currently on. So this person has been bringing 2 liters of milk. Now they are 10. So do I have a trend analysis from the system showing me the customer with the biggest growth, so that now we can now target them for different projects and all that. The fixed asset register, again, I cannot overemphasize this. It should have a way you can depreciate, you can use a method. Depreciation has different methods. So you can say, I want to have a system that gives me depreciation on a reducing balance basis. Of late, we have also seen, like in Rwanda, a surge in organizations that do money lending, for instance, or credit companies. How is the system adaptable, even to have, let's say, an amortization schedule? So in this session, I know that would be so detailed, but in another session, we would be glad to show the different scenarios now on a more practical, deeper approach of maybe a working setup, not for a particular system. We really don't want to advocate for that, but we can have it and say, this is this, and then those questions are asked, especially if there could be people who want to have that disseminated to their partners, especially for good finance management practice, all in one area. Payroll and subs allocation, we have requirements that are governed by compliance. Let's say you have the NITA. A good system should have project allocation, yes, cost-centered allocation for the projects, but also the requirement for the compliance. And this is why we really work closely with the consultants. Have we deducted our NITA? The payslip, does it have SHA? Does it have pay as you earn? Does it have the pension deductions and all that? So a good system should not have an aside thing. It should have everything embedded for that payroll within it. Within itself. And this is where, if this is not possible, the system should also accept to communicate with other systems to achieve this goal. so that we do not have duplication of systems. And we also have integrity of reports through maybe the double entry accounting that all the systems will be required to use. Then donor-ready report, this is a very important one and a very critical one, where a donor comes and says, this is what I want to see. Often we have seen as an organization where there is no donor who has a template that looks like the other. So does it mean that you have to maintain different systems? The answer is no. A good system should have a donor reporting customization or configuration where you get in and say, I want all the date column, I want all the payments, the supplier name, the amount, all these other things. And this is why it's a full-time thing to set up a system until it's done, because you have to design all these things. So a good system therefore comes with this flexibility that you have to have the donor-ready reports. Hoping I'm still audible, kindly, or somebody to confirm.
Yes, you are very audible.
Oh, thank you, thank you. And maybe hoping that I'm also still very relevant. Don't want to go the other way. Yeah. Then we have the bank reconciliations. Again, from experience, is that most systems will have a bank reconciliation module that is outside the system. And what we have also seen is that that has a lot of errors. You have to wait a long time to get the bank reconciliation. It's also very hectic for the accountants to do this. So a good accounting financial management system, if the business is really to be sustainable, has to embrace bank reconciliations. And this goes along the way. Whether it's the ESO, whether it's the partner, they have to do bank reconciliations. And now, what we've done, we have introduced something called the workflows within our systems, for example, where the workflow happen between bank to bank. Previously, the banks and financial institutions were a bit mean to give us access to their APIs and their access levels. But of late, I have seen some flexibility again. And with the growth of AI, most of these integration points will be at the website. And the only thing they will need is a verification process, so that the customer is assisted in that when the customer pays or receipt comes to the bank, nobody posts that transaction all the way up to the financial management system. And therefore, you can even have an automated bank reconciliation. But these things happen, of course, with good finance practice policies. And we are also looking for consultants. We are really requesting them that finance policy and manuals for an organization can also help us to deliver good systems to the users, so that there is no bypass or loopholes when it comes to the integrity of the reports that we're getting at the end of the chain. Good thing is that the generation of also consultants and finance advisors and auditors that are in the ground now, I have really seen a shift for the last 10 years. And they are really tech savvy. They also want to do things in a very automated manner. And therefore, the pace is growing, where the finance policies are being embedded in some of these organizations. And we are also able now to have a very good working system, because where policies work, where a board has sanctioned things in a particular way and it has been adopted, it is easier for us to put in a system and say, you can't make a receipt from the bank without this happening. And therefore, systems are designed to fall in line with that. And lastly, we believe now, because then what is the goal of having all these good finance systems and good financial management systems, then this should make us ready, or our partners, for the investment readiness packages. And what we have been doing on this front, for example, is that, yes, as an organization, we will give a certificate that says, yeah, from where we sit and where the only area we know about, which is financial management systems, is concerned, yeah, we believe they are investment ready. And therefore, and actually that I think happened today morning. And when that investment company asked us, yeah, we told them this is a platform they are using. The client approves what levels they should access. Their IT team accesses the system and says, okay, fine. Then we can even go to the ground and see how things are happening on a day-to-day basis. So if you are dealing with 3,000 farmers, for example, which happens, then how do you deal with them in an automated way? How is your rider, for example, which is a real case we do have, how is your rider enabled to use their phone to capture the information they come with? Does the system come with a GPS geolocator, so that now you can even map where they are going, and therefore you can see where the farmers are concentrated, and other impact-driven metrics that can come from such a system. So again, this is just a sneak peek. There should be a deeper insight into really what, or a system should really target the person who really needs it, like I said in the previous slide, so that you don't get what really does not serve you. Some people will have riders, others will have this, others are reporting to this and this, and therefore a system should have this among many. Like in a good implementation, we do, for you to have a good financial reporting system, you should have over 40, 45 modules. This is just maybe what we have picked as a takeaway from our experience, what really should be in a good system for it to give you that visibility. I'm almost getting done, so that we have a time for reactions, kindly. I had picked the issues that I have seen from now what we are calling a real experience of this. Now, there was an organization, I'll not mention the name, but yeah, they have not allowed me to do that. This was in Uganda again. Donor came, they were actually financed to have the assistance, but every time they were having a surplus. So when one day their board, it's actually a school, it's an institution. One day the board asked, why are we having surpluses on this? Of course, it's way more deeper than this, like the consultants will say. But you're maintaining one bank account, but the programs are like 4. So basically, they had actually left themselves to fail. All the programs from this foundation, from the students themselves, is all coming to one bank account. You can't allocate. Now, the staff time that was allocated for the project coordinators and all the rest, it was by this person can either be a part-time employee, but not by project. The donor funds are again being mixed with the membership income or the student school fees. And the board financial report is where you say, next week we have a board, and therefore I need you to have the report done. So the accountant gets to work and starts making the reports. There was no fixed asset register. So again, as an example, we just went there. It's just a matter of actually not doing very deep analytics. It's just going there and historically get a cut-off date, deploy the 3 programs, and separate it from the administrative pool. Then you configure the pay slips and payroll based on the project codes. Then you pick like 8 months of the historical banks and reconcile. And we actually here, we also trained the executive director, who was very keen on it because the confusion had already happened. The donor is complaining. So the finance officer and the program director and the executive director now were able to see the reports on their perspective, or in their perspective rather. So the management report was ready in week 5 for the last 8 months, something they had not gotten. Therefore, they went back to the donor. Actually, the donor is a global donor. He's in all the continents. And they actually stamped and said, we are satisfied for this. Again, we said we can give this example so that the stories come from these users or these people. And you can be able to now see how it can now be mapped, because at the policy level is, I think, where it's really failing in as far as systems are concerned, because people are always looking at breaking the bank to get a good system. But for sure, things have changed. The way you would buy a system in 2012 is not the same. Right now, you can even have all these AI analyticals like cloud, which with a good person from ZTech, from IT or JKUAT or any other university, you are able to come up even with this system. But at least it should serve the fundamentals of financial management and the system requirements and all the IT around it, the security and all that. So I want to talk about that investment readiness certificate. It could be in the form of, like, let's say ASEC could have a certificate for that they do their own due diligence as far as financial systems are concerned, and maybe make it as a policy, just as a suggestion, that they can even issue the certificate. And then an organization, let's say like Venture City or any other that provides these services, is used to verify or quote unquote do a finance systems audit or a systems audit to come up with a good recommendation or otherwise, and therefore the investment ready certificate is given. As an organization, we have it, of course, on a small level because we are only a small player. I'll highlight that. But these big bodies like ASEC, like institutions like ZTEC, we would highly actually recommend that some of these things are integrated from the institutions to all those startups that are doing it. Because I believe, not even believe, it's a fact that a system only comes to underscore the finance policies that the organization or the business processes that an organization is using. That those things are so many is why we need a system, because we will not be able to relate all of them, or it will take a lot of time. So I believe in the other system where the business processes are well defined, be it in a startup. If they are not using money from their phone to fund the organization, or they have no clear distinction between personal finance and the startup finance, then that is a system flaw. And if that is fixed, then the investment readiness certificate should come to that. For those more advanced organizations that are at a scale-up level, they should then be at least have a digital platform that is governing that, which I think there are things that are known, but I am not so sure. Maybe I should be guided if these are being issued, or these certificates are being issued for purposes of ensuring integrity, even in the organizations that we are supporting. And this will help us at least have the assurance, even if we put a word. I had a case of a donor who financed some partner organizations to have a system, and I will say I had mixed output of those objectives, because the organizations that had a working system, be it manual, that they were doing things in the right finance practice, the system works, the digital system works, because they have the goodwill. But there is another half that will not have. So even segregating these people, so that also the ESO does not really take a lot of time and resources to handhold support an organization that really does not have the goodwill for transparency, accountability, and the other good finance principles, even before we advance further to having a running system. Well, so as I come to the conclusion of this first session of this, is that we would recommend 3 things that you do. Of course, if from any providers that you know, that if there is a finance, you have to do a finance health check. Yeah, you can ask yourself some few questions of, can we produce management accounts for the last month in under 1 hour or 30 minutes or real time? Do you know exactly how much your largest program costs or was the total for the last quarter? If a funder is asking for 6-month account, can I send them by tomorrow? Therefore, you may need to get a demo of the system. You can test different systems. You can book a demo and get. Now, test people. Most of these things are free. If you go to Venture City, if you go to Odo, if you go to Zoho, if you go to QuickBooks, if you go to any product, you can get a demo and say, I want to see how then you can do ABCD, right? And then they should show you. It should be free, you know. Then another step now, the last step you can do is to have just a test of a demo on a program and see, is it running the way I would expect it? And I can assure you, if you do this, then you will have a very good path to acquiring a working system and eliminating those gaps. So I will have a stop at that, so that I give time for reactions. It's 12:51 p.m. and I want to give this space for questions and or reactions, kindly. The floor is open for really comments, questions, or additional inputs, including positive criticism is still allowed.
Thank you so much, Dr. Jackson. Mine just to say thank you for this elaborate session. It has been quite informative, and you've also been able to really outline, the real case studies in the field. Maybe what I wanted just to complement is, in addition to what you've already been able to outline, like just to emphasize the fact that compliance with the grant agreement letter is actually something that is extremely important. I think some of the things that will be very pertinent will be, especially if the donor really expect to have segregation of the finances, that aspect really needs to be, well addressed. If the donor also expects you to open a special account specifically for their, funds, it's also good to be able to comply with that. So should there be any scenario where anybody is not really able to comply, then it's always very prudent during the initial kickoff meeting to explain to them so that they do provide a waiver for that particular aspect. Then also the aspect regarding, the financial forecasting, the 3 month, but then also just to maybe inform everybody, it's also very prudent for the management to be able to forecast the entire cost. If you're expecting any donors money, then there is always a disbursement schedule within those grant agreement letters. So you can even do the annual, forecasting. Then you work with your managers to make sure that everything is on course for you to be able to unlock those particular invoices based on the deliverable that are expected. But also most prudent is providing all the relevant supporting documents. Then if you're not able to, it's better you also let the donor know well in advance based on the current architecture of your specific entity. Thank you so much.
Thank you very much, John B. And like I said, this discussion is very open. I think we have just gone on the surface of it. And thank you for these inputs. You're talking about the financial forecasting and the requirements of the disbursement schedules, the MOUs. Thank you very much. This is very important for, again, for the sustainability of the ESOs and the partners alike. So thank you very much, John B, for the addition. And thank you for appreciating. I don't know whether there is anybody else with an interjection or a comment. There is Aziza Kioko. I would really love to hear from them, and Nancy Dala. I think Mr. Cheruiyot dropped off. Well, then if there is no other input, maybe I can give it back to Lois if you have some comment on this. Well, if not, then I will give the floor back to Madam Mercy Kimalat. It has been a pleasure. Thank you very much. It has been an honor on my side to have this session. And anybody in this session, please feel free to ask me or contact me for any other engagement on this. Thank you very much. Back to you, Mercy.
Hello, I think you can hear me now.
Sorry, I had given the mic back to the host, but it's okay. I think she'll allow us to give your input because I had already handed up the mic.
Okay. Yes. I'm talking on behalf of Mercy. She just called me. She had to jump into another panel discussion, but we really appreciate you, Jackson, for this session, and for also the input we've had from John B. And well, for any other questions, what is going to happen? We're going to share with you a feedback form, which we appreciate your feedback. and any other questions that may come up following this presentation from Jackson. So if there is no further comment or question, I think we can bring it to a close.
Thank you very much, Lois. All right, thank you very much, everyone, and have a nice day ahead.
Okay, bye-bye.